Hi everyone, welcome to Logical Investing with Shubhendu. In today's video, we are going to talk about an interesting stock in the infrastructure space. This is a research which I am doing so that you can treat this as one of the sources of information, right? I am trying to gather sources, gather data from multiple sources, and then trying to put together all of that information for you so that you would be able to then understand how do we analyze stocks. This is no way a stock recommendation channel for two reasons. One, I'm not a SEBI registered advisor and I'm a learner myself. So whenever you are taking any buy or sell call on any of the stocks which we are discussing in this channel, please definitely do your own due diligence and then only take a call. Okay, now coming to today's discussion on infrastructure space. Infrastructure is really important for any country, and now when the country is a developing country like India, of course infrastructure plays a huge and critical, very massive role in the growth of the economy. The first thing which comes to our mind when we talk about infrastructure is roads, right? National Highway Authority of India. There can be roads, dams, bridges, flyovers, it can be railroads. Now, these are some of the things which are very visible and we are all aware of it. In the budget 2022-23, this year's budget, capital expenditure or the infrastructure development budget was almost increased by 35% year on year. From last year to this year, there has been a massive increase of 35% on the infrastructure spend. That is now almost 10 lakh crores, which is a massive number. Now, all of these things which we talked about, they are definitely going to see some or the other traction. What are some of the companies which are operating in this space which makes it really attractive? Today, we are going to talk about a stock which is called as HG Infra Engineering. HG Infra Engineering Limited, HGIEL, is an Indian road infrastructure company engaged in the business of engineering, procurement and construction EPC services, maintenance of roads, bridges, flyovers and other infrastructure contract works, primarily in these few states of Rajasthan, Uttar Pradesh, Haryana, Maharashtra, Andhra Pradesh and Telangana. It was incorporated in 2003 and it is headquartered in Jaipur, Rajasthan. Now the major services are road construction activities through EPC, which is engineering, procurement and construction business, and with selective focus on hybrid annuity model projects or called as the HAM projects. The company is also pre-qualified to independently bid for large EPC and HAM projects. Pre-qualification is really important because it takes a lot of time for companies to get qualified to bid for a particular project. Having pre-qualification to independently bid for large projects is a big plus point for any company in this space. The company's customer base includes government bodies like National Highways Authority of India, Ministry of Road Transport, and then private road developers like IRB Infrastructure Developers, Tata Projects, Adani Road Transport and so on. The government sector comprises of 84% of the company's order book, while private sector comprises of 16% of the order book. Overall, the company has a very balanced diversification from different states, while it is just getting started with Maharashtra as a state. Now, the company does not have any manufacturing plants because it is in the construction business, and then they normally work at the site which is allocated to them. The company has invested in different construction equipments, including crushers, compactors, graders, loaders, pavers, mixers. Now, if we look at the projects completed, the company has 36 projects which have been completed since inception, of which it has received provisional completion certificate for the following in 2021. So these are some of the key projects for which it has got the provisional completion certificate. Now, ongoing projects, the company has about 15 ongoing projects, some of which are notable ones are construction of the Rewari bypass in Haryana, which is worth 432 crore on HAM basis, the hybrid annuity model as we talked about. Under National Highways Authority of India, we have construction of 8-lane carriageway in Delhi, Vadodara, greenfield alignment, cumulatively worth of 3135 crores on EPC mode. So now there are multiple such projects. In terms of new projects which the company has got recently, it has got about 7 new projects recently. The company received PWD project in Rajasthan worth about 448 crores, 2 new HAM orders in Odisha worth about 2615 crores. It also bagged orders of 1060 crores for the development of a road in Andhra Pradesh, EPC order worth of 1393 crores in New Delhi, and 2 HAM orders cumulatively worth 1409 crores in Telangana. This clearly says that the company's completed projects, the ongoing projects and the new projects which are coming up are really good, and the company is able to get a pie of the overall infrastructure budget which has been laid out. Now we are on the website of HGIEL, HG Infra Engineering Limited, And there on this website they have talked about the different projects which they are working on, the vision of the company, and if you scroll down you would see the key highlights where they say that they have 7 new projects, 15 ongoing, and the 36 completed, and 1900 plus fleet size, which we talked about. Now if we go to HG Infra's financials, we would see that HG Infra currently is trading at 562. In the 52-week high was 831. It has come down, corrected quite a bit from there. The overall low was about 252. 52-week low was 252. The market capitalization of the company stands at 3,666 crores with the overall reserves of about 1,168 crores. The debt to equity ratio stands at 0.74, which is good for a company of this size, with debt to equity ratio being less than 1. If we start looking at the stock PE, the price per earnings trades at about 9.47, whereas the overall industry PE in this space is at 27.9%. So the company is trading at 1/3 of the overall industry PE, which makes it really attractive to me. The company is currently trading at almost 3 times of the book value. If we look at the ROCE, the return on capital employed is about 25.6%, which is very good. Return on equity is about 25.2% again, which is also very good. The company has a face value of 10, so there has been no stock splits and so on. The Altman Z score, it stands at 4.32, which is again a good number. It's much more than 3. If we look at the current ratio and the quick ratio, they stand at 1.93 and 1.73, which is way higher than 1, which is a good sign that the company has enough liquidity for its operations. Now if we look at the interest coverage ratio, it stands at 5.58. Anything above 3 is a good for interest coverage ratio. We see it as 5.58, which is good. Asset turnover ratio is more than 1, which is also good. Now if we look at the overall sales growth in the last 3 years, we see that the overall sales growth has been 23.2%, and the sales growth in the current year, it's a staggering number of 71.1%. If we look at the profit growth of the year, then it is at 115%. The profit growth in the last 3 years is at 41.2%. His stock price had made a low of about 290 and had made a low of almost around 800, 794, 800 levels. And then from there it has seen a healthy correction. Right now it is trading at around 200-day moving average value of 562. If we start looking at the quarterly results, the sales in March 2019 was 584 crores, and from then on it has been almost stabilized at that number, 532, 479, 571, 634. In June 2020, the quarter was really down with 312, and then from then on, it has again increased. In September 2020, you see that there is this 483. December 2020, it was 751. March 2021 was 1056 crores, and now it is at around 951. The overall expenses have also gone up in proportion. However, we see the operating profit margins and the operating profits both have increased. Now, if we look at the annual profit and loss numbers, we see that the sales in March 2017 was 1056 crores, which has increased to 1393 crores in 2018. Then 2000 crores in 2019, 2200, 2600, and the trailing 12 months data stands at 3731, which is a very good number. In March 2017, the operating profit was at 124, increased to 208, 305, 353, 477, and 698. The operating profit margins were hovering at around 12%, 15, 15, 16, 18, and 19. This is a very healthy sign that the company at this stage is trying to improve its overall operating profit margins and is able to do that consistently on a year-on-year basis. This makes it very attractive to me as a stock. Net profit has also increased from 53 crores to 387 crores in the trailing 12 months. The earnings per share, of course, has accordingly increased to 59.41 as of today. Now, if we look at the share capital has also consistently grown from 18 crores, it has grown to about 65 crores. Reserves, if you see, from 158 crores in March 2017, we are looking at 1168, almost 1200 crores of reserves has increased. Now the borrowings, if we see, this is one area again, the borrowings have also increased. The borrowings have increased from 204 crores to 408, 380, 520, 768 and 918. This is not a good number. I would be more happy if the borrowings come down. The other liabilities also have increased from 192 crores to 623 crores. Now, if we look at the overall cash from operating activity, we see that the cash from operating activities has been consistently positive. The overall net cash flow has been positive at 120 crores in March 2021. The overall debtor days is at 82, which is lower than 113 previous year, which is a good sign. The working capital days has also come down from 113 last year to 101 in March 2021. The overall promoter shareholding, if we see in March 2019, it was 73.74%. Now it stands at 74.53%, which is again a good number and a very good number in fact, and it clearly shows that the promoters bullish about their own company. Now let's look at the ICRA credit ratings, which was published on 13th of December 2021, that there are multiple instruments which are fund based cash credit, which has been the rating action is A plus positive reaffirmed. So that basically means that this 140 crores which is being rated, that has been reaffirmed as A plus, which is positive, which is a very good thing. Non-fund based bank guarantees of 1300 crores are also A1 reaffirmed. Long-term, short-term, non-fund based bank guarantees, these are all reaffirmed. And then non-convertible debentures, these are positive and assigned. This is a new one which was not there before. That is the reason why it has been A plus positive assigned. Now, if you come down to the key rating drivers and their description, we look at the credit strengths of the company. The company definitely has a healthy revenue growth over the past 3 years. This has been a strong point which we also looked at from the sales figures, and the growth is expected to be sustained over medium term on the back of strong order book position of 6,855 crores as on September 30, 2021. The operating profit margins also improved to 16.2 in 2021 and 16.3 in the first half of the year FY22. Then there is a strong order book position. This is something which is very key. The order book position remains strong at 6,843 crores as of September 30, 2021. Reputed and diversified customer profile. This absolutely helps because the company is into doing business with multiple states and different government bodies including NHAI, the railways, private road developers and all of that which we talked about. Now there are some challenges, however. There is a high TOL by TNW, which is the high total outside liabilities versus total net worth. Now let us understand this. Whenever there is a total outside liabilities versus a total net worth, the ideal value should be between 1 and 2. It is best if it is at 1 or low when the total outside liabilities are lower than the overall net worth of the company. The consolidated TOL by TNW is high at 1.42 times as of March 31st, owing to a sizable mobilization of advances of 322 crores. Timely completion of these HAM projects within budgeted cost remains a key rating sensitivity. Now there is intense competition in this space, vulnerability to price fluctuations. However, presence of a price escalation clause in these contracts mitigates the risk to an extent. There is a risk of reduction in the workflow in case any prolonged down cycle in the road construction sector, as almost entire order book 95% consists of road work. Now this is one area which we wanted to also talk about, that overall diversification is important for HG Infra. Right now, majority of its revenue comes from only the road construction sector. So diversification is absolutely important. Now let's look at an article which came up in Money Control on March 16, which talks about HG Infra and Engineering, is it poised for a re-rating? HG's diversification into newer segments would reduce concentration risk and enable re-rating. This is exactly what we talked about, that HG Infra right now is getting most of its revenues from the road construction business. If HG Infra is able to diversify into different other areas which are also adding additional revenue to its kitty, that is when it would be able to diversify, and thus the stock would be stronger. The company is targeting railway projects, airport runways as well as water projects under the Jal Jeevan mission. As per management, the nature and qualification criteria for railway and airport projects are similar to roads. As such, HG can tap into these opportunities. So this is all about HG Infra. In this analysis, we understood that the overall space infrastructure development in India is getting a push from the government. In such a case, when companies like HG Infra, which are showing a healthy order book, which are also showing a great history of completed projects, ongoing projects as well as upcoming projects, I felt that this is a great company to look at. Now this is not a stock recommendation video at all. I wanted to share this video with you to help you understand How do we analyze such companies? How do we analyze a space? What are some of the areas which we are looking at when we start analyzing these companies? What are some of the key financial ratios which we should be looking at? What are some of the sources of information which we should be going through? Please do your own due diligence, because my research is not foolproof. I'm trying to collate information from multiple sources so that it helps me in my own investment journey. I believe that some of this will also help you when you are doing your own analysis on certain stocks. Please do your analysis, and if you like the video, please hit the like button, and if you are new into the channel, please subscribe to this channel and share it with your friends and colleagues as well, so that we together are able to do investing in a very sensible way, in a very logical way. That's all for today, folks. Thank you for watching. Happy investing, happy logical investing.